stock market visuals flashing. Ever felt like you're missing out on the wealth building game? Like everyone else is winning while you're left on the sidelines? What if I told you there's a secret blueprint right at your fingertips that could give you the edge you need? Today, we're diving into the powerful world of fundamental analysis, the strategy that smart investors use to turn stocks into wealth. Stop right there. You can't afford to make blind decisions with your money. Without the right knowledge, you're gambling, plain and simple. Let's slow down. You've got dreams of a wealthy lifestyle, but achieving that? It's about more than luck. It's about understanding the fundamentals of the stock market. So, how do you analyze a stock? Stick with me. In the next 10 minutes, I'll show you how to master this game. And it might just change your life. But here's the catch. It's all in the details. If you miss the fine print, you're toast. First things first, what even is fundamental analysis? Think of it as the detective work behind the stock market. It's all about evaluating a company's true value. This isn't about guessing, this is about facts. We're talking about financial statements, profit margins, revenue, and debt. You need to know where a company stands because the market can lie, but numbers don't. And here's where most investors fail. They let emotions drive their decisions. They get swept up in trends or hype. But if you learn to analyze these core fundamentals, you're setting yourself up to make rational, informed choices. Seriously, if you're making decisions based on TikTok stock tips, we need to talk. Trust me, that feeling of getting in on the next big thing could lead you straight to disaster. All right, now that you know the importance of fundamentals, let's get into the meat of it. The key metrics every investor needs to know: PE ratio, earnings per share, and return on equity. First, the PE ratio, price to earnings. This tells you how much you're paying for every dollar of a company's earnings. A high PE could mean a stock is overvalued. Too low, it might be undervalued. So there's potential for growth. Earnings per share, this one's key. If a company isn't making money, it's hard to grow, right? High earnings per share is a sign of profitability. Without profitability, your investment could go up in smoke, no matter how much you think you're winning. Finally, return on equity. This tells you how efficiently a company is using its resources to generate profit. A high return means it's doing more with less, a great sign of solid management and growth potential. Making smarter decisions. Now, imagine you've got all these metrics in front of you. You're starting to understand a company's real value. But here's where it gets even juicier. What if you analyze all the right numbers but still make the wrong call? Let me tell you, the market can be unpredictable. This is why you need to diversify. Don't put all your eggs in one basket. Spread your risk and make sure your portfolio isn't just about stocks. It's about smart asset management. Come on, you wouldn't keep all your money in one checking account, right? Don't do it with stocks either. Fundamental analysis gives you the tools to make informed decisions. But here's the catch. You need to use them. Don't let fear of missing out or a wild trend push you off course. Focus on the facts. And now, here's the most important question. Once you've analyzed the numbers, how do you actually make a smart buy decision? The secret to becoming a master at stock analysis isn't just about the data. It's about knowing when to act. Stick around until the end because I'm about to reveal that secret. And trust me, you won't want to miss it.